Hi, it's Brent with Trade Therapy, and welcome back to the Trading Couch. This week's Clarity Spotlight was on Meta. We're going to walk through a couple of weekly charts and then look at a daily chart. We're going to look back on where we left off Meta back in February. But just a reminder, this video with all of our videos is intended for educational purposes only. It's not investment advice. Trading involves risks. Do your own work, manage your own plan. This is where we left off in February. This was the weekly back when we were watching price moving up into this all-time resistance line right here. It made a huge run coming off of that November 22 low. And the question on the table was whether or not it was going to continue to push up to our target, which is this 1618 extension, or was it going to hit this all-time resistance line and need time to cool off? We had it on reaccumulation watch. We weren't calling for a top here because we believe that this is still our target for this initial run out of the November 22 bottom. We weren't looking for a top here, but we did think it might need some time to cool off. So we were watching for a real test, the first real test that Meta would have from this low right here. So we weren't cheering, looking for continuation, or we weren't fearing a big pullback. We were just looking for run-of-the-mill profit being taken, gains being recognized. And so that's where we left off in February. If we jump over to current weekly chart, we can see that we did get that pullback off of the all-time demand line here. We can see the April tariff pullback brought it down to this known area right here, which is this volume shelf where it chopped around here back in early 2024. And that's really what we look for when we're looking at a price running into obvious resistance. We're going to look for price to retrace back into a known area, which is this shelf right here. And we can see that it did find support there and then continue on and push back up into this all-time resistance line again. That's constructive recycling. That's what it looks like. You can see that at the bottoms, you can see volume increasing as we hit the bottoms. It's the same thing the past couple of weeks as Meta has pulled back. After that earnings report, you can see volume increasing. And then you see at the tops, we do see above average volume, but we don't see those real spikes coming up into the top that would show big profit taking or distribution. We just see run-of-the-mill profit taking. There's a lot of gains that are left on the table for Meta. And so it's not surprising to see institutions processing those gains and maintaining momentum as they backtech these weekly references and these Fibonacci levels and weekly moving averages in here. The main point is that the weekly is really just processing in here. We don't see volume indicating a top. We don't see a real thick top shelf building out in the volume profile. We just see run-of-the-mill profit taking here. And the question is it going to find support and continue pressing on up into our target? You see the Fibonacci cluster here, the 1618 from the tariff pullback, which is a Fibonacci extension from this high to this low, and then the high to low from the post-COVID pullback. Those two 1618 extensions match up almost perfectly here in the mid 900s. So that's going to be our target. We're going to watch to see how this develops. We do believe this is reaccumulation. Good time to take a look at the daily chart. We can see that this pullback here, and especially the big gap down on earnings, is intended to flush out weekends. We did see a gap that was filled from the run back from the summer run back in May, but we see some additional gaps below. The question is whether or not Meta will find support at this level. We did see a hammer form last week. We do see bullish divergence forming on our RSI or momentum indicators. So we'll have to see how this follows through. It is Monday. We did see an upward movement, so we'll see if we can get continuation there and move up and fill this gap right here and see if it's now time for institutions to continue on with their next leg of their campaign. What's clear is that there's huge support at this level. We'll see if that will be enough to drive price back up into this gap area where it can challenge some of these now falling moving averages and see if we can get back up above that. The hammer with the divergence, that's not a trigger, that's a signal. We do need to see follow through on that. If we do see a big candle on it, remember big candles can fade just as quickly as they can pop up. So let's keep an eye on how it handles these moving averages and how it handles this big test right here at the 786 at 675, which is your rising 200-day exponential moving average. And by then, by the time it gets up here, it's going to probably run into its 21-day or that 30 and 55 right around in this area right here. So this is a big area that Meta's going to have to get through if it's going to go up and fill that gap. We did also take a look at the Mag 7. We wanted to get a feel for how the larger mega cap sector was looking, the mega cap tech sector was looking, and you can see that Mag's pulled down into, again, a known level right here on this pullback. See this big volume shelf support right there. It also formed a hammer last week. It is Monday. This did gap up and push up, so there's a chance that this candle right here might be left as an abandoned baby. It's very bullish. You can see this strong volume shelf support here for the Mag 7. So very bullish looking chart for the Mag 7 and for Meta. If we look at the setup in Mag 7 and then we go back and take a look at the setup for Meta, you see very similar setup where you had this sharp drop here intended to shake people out of the trade, and then a very bullish reaction to that. We'll be tracking volume and we'll be tracking price as it gets up into these areas, these interesting areas right around the 675 to 700 level as it's retaking on this Fibonacci and these moving averages that it lost last week. That's where we're at. That's what we're going to be watching. We're going to be looking for whether or not demand can continue. Can it prove that it can hold and continue to press up without heavy sponsorship? If it does not, if we see it lose this level and come back down into the 500s, back down into this range, that's not game over. That doesn't mean that the trend has changed. It just means that they're likely going to go down here and try to fill this gap at that level right there. And it just means that this big reaccumulation structure just needs a little more time. They need to continue building their positions before they're ready to press higher to move forward in its campaign. That's what we're looking at with Meta. A great big run, bunch of gains on the table that need to be processed, and that's what's happening here. We're going to be watching and looking for how price is going to handle these upcoming challenges as it starts to rebuild its campaign, and we get to see whether or not there is enough momentum and enough support within the market for the Mag 7 to continue. So that's what we're going to be looking at. I hope everybody enjoyed clarity this week. It's all the time we've got for Meta. We'll see you next week.